In a world where economic uncertainty is becoming the norm, global markets are sending mixed signals as investors brace for pivotal U.S. labor market data and updates on controversial tariffs. This moment feels like a turning point, but here's where it gets intriguing. Will the upcoming numbers justify widespread expectations for a Federal Reserve rate cut? And what about the political drama surrounding Fed Governor Lisa Cook's battle to retain her position amidst threats of dismissal by President Trump? These questions are keeping Wall Street analysts up at night. When traders return from the long Labor Day weekend, they'll dive straight into key indicators that could shape the financial landscape. The spotlight will be on Friday's non-farm payrolls report, a critical measure of job growth in the U.S. economy. But don't overlook other significant releases earlier in the week. For instance, Wednesday brings the Job Openings and Labor Turnover Survey, JOLTS, which provides deeper insights into hiring trends and worker confidence. Then, Thursday features ADP's private payroll figures, often seen as a precursor to the official government data. Together, these reports will give investors a clearer picture of whether the labor market remains resilient or if cracks are starting to show. Adding another layer of complexity is the ongoing trade war saga. A recent appeals court ruling has thrown a wrench into the situation, declaring most of former President Trump's tariffs illegal. While this decision adds legal clarity, it also raises questions about how current policies might shift under pressure from global trading partners. Will this ruling lead to smoother international relations or spark even more tension? It's a debate worth having, especially since trade stability directly impacts business confidence and consumer spending worldwide. Meanwhile, across different asset classes, movements have been notable. In Europe, stock markets kicked off the week with gains, signaling cautious optimism among investors. However, Asian markets painted a more fragmented picture, with some indices climbing while others dipped. Cryptocurrency enthusiasts watched Bitcoin take a hit, while traditional safe haven assets like gold soared to record highs. Even the mighty U.S. dollar slipped slightly, reflecting shifting sentiment in currency markets. These dynamics highlight just how interconnected and sometimes unpredictable global finance can be. And this is the part most people miss. Beneath all the headlines lies a broader narrative about risk versus reward. With central banks around the world walking a tightrope between stimulating growth and controlling inflation, every piece of economic data carries weight. Investors must decide. Do they bet on continued resilience in the labor market or prepare for potential turbulence ahead? So, we leave you with this thought-provoking question. Should policymakers prioritize short-term boosts to the economy over long-term fiscal responsibility? And if so, at what cost? Share your thoughts in the comments below. We'd love to hear where you stand.